Well, hello. This video is being created for you as a client of our practice about retirement. This is not one of my YouTube videos that goes to general public, and that's purely because I can imagine that you must be, or you might be worried about your superannuation balance right now, thinking how those new Trump policies will impact your retirement and the level of your savings. I've had few clients reaching out, and look, this is completely justified to be anxious and worried. As disturbing and unpredictable as today's events are, remember those. 9/11, the market crashed, and then the recovery took only 1 month. COVID crash, the full market recovery took less than a year. Or GFC, the global financial crisis between 2007 and 2009, where stocks dropped more than 50% and recovery took 3 years. So, this is not the first time we have seen market volatility, and some can even call market overreaction due to unexpected and unfavorable policies coming from the USA. But please remember, number one, your portfolios are highly diversified through various financial assets: cash, fixed interest, bonds, Aussie shares, international shares, and property of various types. Additionally, you have a great deal of geographical diversification. And to top it all off, you have a number of different managers that are looking after a portion of your savings, with each making their own adjustments and decisions based on market behavior and information at hand. An appropriate asset diversification is the best protection one can have when investing savings for long term returns. Number two, we should only react and deal with things that we can control. You and me, we cannot control US policies, but we can control how your money is invested. Hence, this is why you have such a high level of investment diversification. Number three, as you can see, we have a bit of crazy market behavior with suddenly one day drop by 5% and surprising recovery the day after. It is impossible to make any rational investment decisions in such a irrational market. Selling investments down and running to cash for cover would be the worst financial decision with a huge negative impact on your retirement. Number four, lastly, please view your superannuation balance in a little bit different way. Yes, I know that your superannuation value is showing as a lower dollar value, but think of this analogy. Let's say that you invested all your super money and you bought yourself 10 houses. Suddenly, there is a property market crash and all your houses dropped in value by 20%. Well, ask yourself this question: would you sell all your 10 houses because of this market volatility? And the valuation is telling you that you lost 20% of the value. This loss only exists on the paper, and it will eventuate only in a situation if you sell those houses. But just because the market is volatile, it means nothing. You are still the owner of 10 houses. They are the same houses they were yesterday and the same they will be tomorrow. As long as you don't sell those assets, you are in the same financial position, and it is enough to patiently wait until market recovers and all your 10 houses will be worth the value from before the crash, or most likely even more. Your super is no different, but instead of houses, you are holding units or stocks. And if you started to receive income from your pension fund, this is where the rental income from your property sector, or dividends from your shares, or interest earned from cash or fixed interest come to be very useful. Not to mention that we allow your income to be only paid from your cash component. in order to never have to sell any quality assets in a downturn market, because this is how you are actually losing money. So if you are feeling a little bit overwhelmed, worried, and stressed, please switch off the news. Don't follow all this bad stuff. This is how the press is making money, and we get addicted to following all the bad information. But what the press wants is just your clicks and more clicks. And please remember, we are here for you. Always feel free to call and have a chat with myself or with Sean, and we will very happily have a chat about what's happening in the market right now or any other issue. I will talk to you very soon. All the best. Bye.